Hey traders, happy Tuesday. It's Samantha LaDuc, founder of LaDucTrading.com. I am here today for Macro to Micro Power Hour to invite Jonathan Gibbons, founder of VigTec IO, so we can talk about market structure and market themes as it relates to trading this macro and micro backdrop. I do this feature with Jonathan on Tuesdays at 4 o'clock, the close, as well as on Thursdays. I typically have a guest captain come in, a subject matter expert. I've had some fabulous guests the past few weeks and months since I launched this, and I would invite you to check it out. I will house all of this content here on my YouTube channel, which is LaDuc Trading, surprise, surprise. And underneath it, you will find an absolute fabulous macro power hour channel playlist. And we've talked about goodness, 1970s style hyperinflation. I had Denise Shull, the trader psychologist to the stars, on a few weeks ago. Scott Melker of crypto fame, and Logan last 2 weeks ago on the real estate housing bubble, the most unhealthy housing market in 10 years. So definitely check that out, where I also post my Women in Trading and Finance series. And this is the place I want you to be directed for my buddy here, Jonathan, who is in the room, and want to invite him to come on in. So hold on one second. Let's just do that. There we go. All right. Hey, Jonathan, can you hear me okay?
Yes, just a second. I'm getting my screen set up here.
No worries. So today we're talking summer squeezes. We've done, the meme mania, but in particular, this summer squeeze thesis might pick up a little bit more momentum because we've just had so much option activity driving the single stock activity. And last week I had tweeted out that 111, almost 12 billion in options premium for AMC alone, more than SPY, the Qs, and Tesla combined. So we definitely want to talk about what might be next. And to talk about that, Jonathan, how are you?
I'm hanging in there. I got my Vixx shot, so I'm like struggling here a little bit today.
A little loopy, a little tired. It's also just the summer, right? I think we need some vacation time, which, by the way, we talked about this. I'm going to be taking some when my daughter comes from Europe. So there won't be any webinars the first week of July, which is a very popular vacation week anyway. She lands on the 2nd, so I'm out of here for a week.
Well deserved time off, right?
Yep.
Yeah,
And
for
then
sure.
then we'll pick it up every other week during summer, since we can, have some time to sit in a hammock. So yeah, I'm joking,
Yeah.
of course. So catch me up. What's going on with the VigTec product? Because you have been dropping some bombs that you're going to be launching very, very soon. Tell folks about that.
Yeah, we got the whole new mobile app update. That's a whole rebuild of the iOS app so that we can incorporate the OptionsMatrix into that, and then a re-interface of the interactivity on the whole app. So like getting to market indicators is so much faster, bringing some of the stuff to the forefront, kind of in an informational basis. So it's like, queries things for you up front. So that's in final approval right now. Should be in the next few days. It'll come out for iOS, and then Android's right behind it. So Android is in process right now too, be the same. So that's coming, plus a whole bunch of other stuff in July that's in the pipes too. So that mobile is a huge piece, because we have so many people going back to work and they're still trading. And so we wanted to carry forward the entire app with the matrix included, and make sure that it was in the phone. And so that is there now. And it's the full trade tape, right? With the same functionality, the visuals, the insights modes, all the scans, all the alerts, all the queries, and we're enhancing the alerts and marrying those with other stuff inside the app. So a lot of cool stuff will be in that mobile. And then we know a lot of folks have already been downloading the mobile in preparation. Other folks sign up for notification that when that comes out. We expect that later this week. So barring something unforeseen.
So for those who might be uninitiated, which is not possible, but it's really this marketplace for creators like myself, where I house the risk indicators, the LaDuc Trading risk indicators, which are there, and they're going to be on the Apple Store when you go on this mobile platform. So this is very exciting for me personally. But there are lots of creators that want to get their stuff up there, and this is also where you you are the creator of the OptionsMatrix, which is just this institutional grade, fast as lightning, real-time option flow data, and the scans that support finding what's really happening, I think, better than anyone else. And definitely there are a lot of aggregators out there of option flow, but it's taken oftentimes in a delayed format or out of context, which people don't even know. So when they compare to your product, they're going to be blown away. So that's something to kind of highlight. I'm very excited that the Discord channel that I launched this week, the LaDuc Trading Discord channel, has its options matrix, kind of channel for folks to learn more about that, because we use it in confirming market timing calls. So in other words, is there the support behind it? And we're going to talk about that today. Where is rotation moving? Because it starts to build up that activity, and some of your scans absolutely highlight that early and often. And that's one of the ways that that you in particular can make your prescient market timing, micro calls, and I'm using it as confirmation. So
yeah, like from my sake, at this point, like all I'm doing is building for the most part. So I don't even try and get out there too much anymore because I just don't have time. But like what we're finding is a lot of people like you guys and others are able to use it as a platform, right? Where you're able to build on top of it, like what's happening, and build it into your process. And I think that's really exciting to see because there's so many different things, different use cases for this product. And the ability that it has, like some people are focused on sectors. Like there was some stuff this morning that were popping, like DraftKings was a super example this morning. DraftKings got hit on the Hindenburg report right out of the gate, and it was massively bought with call options by those diamond hand crew that buy the weeklies and the next expiration date out, and it rallied almost like 10% from low to some higher point in the intraday. And I haven't really watched it since then, but massive call option activity instantaneously, and picked up on it probably within the first 3-5 minutes of the day because it's all happening in real time. And then the scans were dropping it out, and it actually landed on the home screen of the mobile app this morning. People don't have it, but we have the kind of the craziest activity of the day shows up on the home screen of the mobile app. So like these types of things are people are building on top of it, whether it's weekly stuff or whether people are doing swing stuff or whether people are doing like a sector specific or rotation specific. There's so many different use cases for what you're trying to accomplish with it. And any type of feedback we get from people, like building scans or creating things, is instantaneous. So we just need to know what people are looking for on top of that. But I'll show a few things today.
Okay.
When I was
going to say, I just asked where to find it and all that jazz, and I just wanted to say that this is the VigTec IO options matrix, and there is all kinds of data that's coming in as far, and ability to filter and scan. Some fabulous scans in here as well. And of course, just kind of the visualization of it, so you can see right now that there's a lot of hedging going on, which we know from skew, but it is very helpful. And you've got it very much like that, a traffic light that we love, right? Green, yellow, red, which obviously yellow is neutral, but it flips pretty quickly. And then this is the Discord channel that we just started, and I'm so pleased. There's already 100 online and 400 offline, so it's definitely cooking. But in the VigTec options, which by the way, there's a freemium and then there's premium, so you can come in and get everything for 2 weeks. But we're also highlighting for sure, like I'm a Roblox, trend bull. But in the meantime, it has definitely, interim term has come back down. So looking to see when it is gathering up speed again. We can do that with the scans. And the same place, posting, this is the risk range alert product that is being housed on VigTec IO, which is a 30-minute risk indicator that tells you when we've got some selling pressure coming in as well. So it's definitely fabulous platform, and we'll talk about that in more detail also with what you see right now for summer rotation. So that's okay. So that's going. That's heading out, and then what's going to be added in July, August? No rest for the weary.
We've got a stock, a pretty powerful stock screener going in for folks, and then some exportable features and functionality for people to consume, and then deliver their own data to themselves. So the way they want to actually do some research and compile information, maybe back test certain things like that. So there's a whole component coming in for that, and then we also have a surprise. So I'm not even going to say what that is.
Okay.
There's something really cool, like because there's so many new people to the market,
Yep.
that you shouldn't have to like put it all on the line to interact and have fun, and also like get in on the action. So we've done something that I've never seen before, and it wasn't my idea either. It was a great idea from the team, and that's our really cool things coming in July. So I'm not even gonna say what that is.
All right. Well,
It's very, very cool. But we're really kind of bringing some cohesion to everything, and people will see like the new mobile app is really important, because it's like easy, like to get to your indicators, for example, is like click, boom, and you're right there. And then the user interface and the interactivity on it is just so much more augmented for the user. It's fast, it's easy, it makes sense. You can be able to do a whole lot more faster than you were before, which is really what we're all about. And then the alerts and push notifications go up a whole notch, because like you're once you're able to have that and it's hitting your phone or your watch, or what have you, and you got complete control over that, and that's continuing to get enhanced. And then for us, it's unlimited. Like I know some stuff out there, like TradingView example has limitations on how many times that you can be sending alerts and things like that. But as we all go back to work, it's a lot harder to be sitting at your desk and monitoring that. We know that. And so, everything's about the mobile and being interactive on that. So like,
awesome.
For example, these notifications that come from your 30-minute trends, hit the watch, hit the phone. You control that yourself, how you want that to go, because it's very hard to be behind it all day.
Yeah, and honestly, there are 300 ETFs, and on a 30-minute time frame, that's overwhelming. But I picked the top 12, right? My dirty dozen, and then I'm very comfortable with that. So everyone has their own personal kind of tolerance, but this is unlimited, so that's very cool. So all right, so then kind of switching gears, you've got the development stuff that we've both been working on. I got the Discord, the risk indicators, yay. What's happening with market structure? We are definitely just grinding higher. There's been some interim volatility, and then it just continues to fade. I have no interest even in buying volatility until it comes down to about 14.5, and then I'll see. So after this week, meaning the FOMC, nothing is expected except perhaps the market being disappointed that they don't respect the inflation impulses, because right now they're softening, right? Yields are coming down, inflation, a deflation of the reflation trade, which is totally also normal. I think we're going to kind of pull back and then head back up in July, but we'll see if the Fed, nothing is expected, but does at least respect it, because back in 2008, they were just not aware that rising was going to be a bad idea until 7 months later. They just kind of stuck to a script. So we'll see if this, any language changes. But then we have options expiration on Friday. And Spot Gamma put out a report that 50% of the S&P Gamma is expiring, and 60% of the NASDAQ. That's a very big quarter end amount of options coming off the the dock, the desk, however you want to put it. So anytime that I see volatility coming, it's typically after the monthly options.
Expiration. Yeah.
Yep.
And this is quadwich, right? So this is in the
Correct.
quarter. So I think you actually have seen a little bit of drop off in volume just overall because, and I suspect anecdotally you see that all summer because people are going to go on vacation, right?
Yep.
They didn't get to go on vacation. They're going to take time off. I think everything we're doing, everybody's going to do because you didn't get to do it. And you're starting to see that. But I think in the absence of volatility, as I've said, 57 million times, it just get rotation.
Yes.
Right. So,
100%
and so like, my thesis at this point for the summer is, eyeballing the rotation in the pockets, right?
Yep.
Unless you get some sort of big risk off moment, which honestly, your stuff catches those in advance warning. So you don't see it right now. I don't see it right now, a huge risk off, right? Doesn't mean it can't happen, but typically positioning will take place ahead of that, where it can set the conditions for a risk off. We don't have that right now. So I suspect rotation. When we get rotation, then it's probably going to be even a little bit more volatile rotation because of the light volume. So like you could really see the volumes come off. Like I call it Lord of the Flies volume, like where there's just little to no volume in some of the sectors. And what I mean by that is, if you let me share my screen, I'll show you. Yeah. And my take on this at this point is you need to front run the sector rotation based on the options market, because the options market is completely kind of driving the stock market outside of the passive ETFs. So when you look at the options market, where's the dollars and the volume flowing to, and what sectors is that flowing to, and what inside those sectors as it relates to inflation trade. You and I were talking earlier on energy, right? So like when I was looking at something earlier, so like I let me get my screen set up here. I was kind of looking at the energy and mineral sector, for example, right? And so you look at this, and not from a sense that this is showing bullish kind of put call environment, highly bullish with Exxon being a big driver, but look at the total premiums. Right, like this is the insights mode. I'm looking at the actual premiums here across the board, and you got a lot of these names just as overall are drawing a lot of attention, and a lot of the ratios of all these are just heavy calls, right? Heavy call volume coming into the space. If I look at that in comparison to say other sectors, right, then I'm starting to get a feel for where the rotation is, and you're using you guys' setups and what you guys. I saw a lot of what. She was posting this weekend and what you've always got with your setups as far as the charting is concerned. I think that's a driver, right? It's a real driver for where you want to look. And then you're seeing for confirmation as it relates to these particular sectors. So when you look at like discounting Tesla, right, as one of the largest options traded in here, there's still a significant premium amount rotating into this space, right? NIO, Roku, right? And so when I'm looking at this, like as a whole, I look at this in comparison to, let's just look at precious metals, for example, right? This is Lord of the Flies volume, right? There's no premium, there's no activity, there's no volume coming into this environment. And as long as there's no volume coming in the environment, it's not going to potentially get going, right? Where there's volume coming into the energy sector. And I was actually looking at that earlier, and I was like, wow, that's very interesting. When you look at the crypto space or the banking space, you can really see that volume still coming into that environment. And you look at
one of the things. Are they coming into banking though with calls or puts?
Let's look, right? Finance, right? Heavy volume in this environment, right? And it's looking pretty. Anything under 0.60 typically is really bullish. Anything from 0.60 to 1 is bullishish, and then 1 to 1.5 is neutral, and then 1.5 and over. Because we've created our own strategy for put call ratio because historically there just wasn't as much options activity as there is now. So the ratio of like 1.0 being a complete barrier doesn't really jive. You see that thing fluctuate between 1 and 1.5 all the time, and that's just hedging. Right. And you see that in the major indexes. So, I mean, you look at this as predominantly, I don't see much bearish at all.
How
right?
about
And the volume,
XLF? Just straightforward XLF and KRE
XLF. Let me take a look at XLF.
versus the underlying banks and Bitcoin and credit cards and such.
XLF is pretty stacked. It's pretty stacked. So 92,000 calls today to 7,600 puts, and the premium is just totally stacked. On the opposite side, dig into the details, and you can kind of look at the strikes. A lot of these are further out. It looks
Yep.
like 22, 23, 21, later 21. So
Yeah, that
I
put
mean,
call
bullish.
ratio does not do that any real service. I mean, it is totally call heavy.
Yeah, it completely, right? I mean,
Point 0.08. Why
yeah.
even bother?
Yeah, so like, so rotation, right? In the absence of volatility, it's just what's cheap and gonna bounce, and then what's not, right? And you're looking for those things. And so it's like, that's why I say I was laughing this morning with DraftKings, because DraftKings dropped heavy, it got cheap, right? In the perception of the trade, right? And you got some different types of trade, which I also was wanting to point out. Like, you've got the rotation for inflation and energy, and you're what you've been a theme for quite some time with small caps, and then you've got the value plays, a lot of rotation to value. That seems to continue to be outperforming. And then you've got these kind of momentum plays, which I just deem the Wall Street Bets Index, right? When you look at this, like inside, these are all going to be tradable vehicles. So like we're inside of this particular, so you saw DraftKings trade 102 million premium today, right? I mean, this bigger than pretty much anything you saw just there in the bank sector, right? So these plays are the Wall Street Bets environment. This is the Momo environment. Roku's there right now. Wish right now. This will rotate.
But at the
all
same time,
summer.
like, do Woof, WOOF. I mean, it had so much Reddit buzz. I would call it noise, but it was also, expected bots. So they're not really buying options. They're just.
Yeah, well, if you look at this, like all these right here, we call it the Wall Street Bets Index. It's just what I would call the momentum index. These are the stocks that are trading like Clove did, right? Clove was just off the charts last week, just insane. It's more of a transitory trade, right? They're using that inflation term, transitory, a lot right now. But these are transitory trades. They don't last very long, right? They're driven in a short period of time because they get going in these threads. I'm not talking about really the one-offs as much as I mean, like, this is a pretty substantive index that we've created of like kind of the major. I mean, most of these are in the IWM or they're, small cap stocks in general.
No, but I'm talking about, for example, Woof, WOOF. I saw that there was mention of this as the hottest meme stock mentioned in Reddit, and yet the underlying options market was pretty slow. So it didn't really support that pump. Is my
Yeah. I think it's a cart and a horse. I don't think these things are necessarily which one comes first, right? The narrative or the trade. I think the volume comes in first always, and then the narrative comes in second. I think when we track this, if you look at the size of the total premiums in this environment right here, like AMC on down, like these are all pretty substantive sizes for single stock names. This just rotates around, right? It just rotates around. And this has been a theme for quite some time. Unless you have a risk off, which we don't have, it's just going to keep doing that. The value rotation goes to a different kind of structural play. These are like, that's maybe a long-term interim play, maybe an intermediate to a long-term strategic setup. This primarily to me is where really I think during the summer you could just see this go from name to name to name to name to name, and it's just they get burnt out and they get traded again, they get burnt out and they get traded again, and it goes to the next one because there's such liquidity and size being traded in these names, and you can track that on a day in day out basis. You can see it, and so, you guys have seen some.
But where do you go in your discovery scan world to spy that rotation to keep an eye on, really,
Yeah, well, there's
because that's going to be very profitable.
2 to 3 ways to do it. Like, first thing I would say is, what are you looking for? So are you looking for like small caps, right? Or are you looking for the Momo stocks? Or are you looking for large cap stuff? So let's just say I'm looking for small caps or Russell. Then you just use the Russell scan, for example, right? And you're going to be able to see the top 100 and see if there's any patterns in this top 100 that are hitting for today. These are things that are a significant volume above their rolling 10-day average, right? So sometimes you're going to be able to catch this. This is the whole Russell, but this is different than if you look at it for just the momentum stuff. So you could see the DraftKings stuff started popping up easier, like instantaneously this morning. This filled probably in the first 15 minutes that there were some significant changes, in the 10-day average, which this thing got blown out, and it was all DraftKings all day. So it really depends on what strategy you're trying to utilize. Are you going for those weekly to 10-day plays, right? Where those are those traded names, the diamond hand type action, which is what you're really seeing. Or are you looking for rotational action, right? Maybe a VXRT or something like that was popping up the other day. It's like, maybe I'm trying to get into something more of an intermediate play. So you've got multiple ways you can attack that, right? And then this is the kind of like Wall Street bulls. This is interesting because this kind of coincides with what you were talking about with the rotation for commodities and so forth. This is institutionally owned. So we cross-reference fundamental and reference data in association with options data. So we take the actual underlying, we're measuring how much of it's institutionally owned. So is it more institutionally owned, greater than 70%? It qualifies as a Wall Street play because more, the stock itself is more than 70% owned by the street. FCX was all over that thing today, up on this side, which is super interesting. And there's a whole lot more down there, but you can see this on a regular basis. Like, this is more of a kind of the institutional side trade, where they're taking a little bit different play for that than if you're looking for so there's the diamond hand stuff, there's the institutional side. If you're trying to like kind of get there's scratch offs, right? Stuff that's going to be done today or the next day. There's earnings things. So it really depends on what you're trying to accomplish as to which one you want to utilize to get you the edge. And what you'll see is footprints. And that's what you're really going to see. Like, if you look at, for example, like I think I've shown this maybe before. Well, here's my point. So like specific sectors, like if you jump in here for a sector and you're sector chasing, right, you're going to be able to run one of these for like, biotech, and you're going to see which ones are popping up. Is there any patterns in biotech today, right? Is there any put patterns or call patterns that are showing up with really unusual activity? And so it's by sector. I think there's so much, like, to have something like this that's in your hands, it really allows you to decide, how am I going to trade? Am I going to trade? Am I looking for intermediate action? Am I looking for, long-term action, like Wall Street institutional action, like FANG type stuff? Or am I looking for diamond hand, trades like this morning? It was a 10% move in DraftKings, and anybody that was buying calls this morning, they killed it. And you could see that a lot of those calls, when you looked at these calls this morning, a lot of these were for this week or next week. So these people had no intention of holding these things. Like, these were just totally transitory vehicles, 625, 618, 618. There's some longer term duration stuff, right? But it's mostly for fast action. So we have the same thing. So like, you can go by sector. You can look for the weed stocks. Are you looking for the Russell? Are you looking for stuff that's $1 or less? Everything's all based on volume, right? And kind of rolling change. But like, it really would depend on what you're trying to accomplish. And then you're going to be able to spot volatility if you just, poke your head over here once a day or something like that to the major index activity, and just check out the call father, right? If you start to see longer dated VIX stuff show up here on a regular basis, like 2, 3, 4 days in a row as being the predominant, index options that are executed, they can't hide, right? People are getting prepared for some volatility. You see stuff here or there, it's just hedging, right? But this is picking out some major volume changes that are taking place. So like, the scans are really meant to be built. And I will say, is anybody that like wants something built, just direct message us, right? And we'll build it like it's quick. So like, we have fundamentals sets of data. We have all the options data, Greeks, you name it. Like it's not, you can't build for you pretty quick. So, but this is meant to give you kind of categorization of specific things that you're looking to play. So what are you looking to play? Like one of my favorite ones, and I just joke about this all the time, is the super degenerate ones, and people see me post about this all the time, is the leverage on leverage. Typically what you see when stuff's about to get real spicy in the risk off environment is these super degenerate prop traders will come out and start trading these 3 times derivative options to the downside in size, in like real size. You just don't see any of that right now. Right. And this particular one is for that. And that's leverage on leverage. And it's just capturing anything that's got real volume. Like this is interesting for July. There was some major size thrown at the $10 SOX strike. And it didn't move much, right, during the course of the trading day. But it's just worth maybe taking a look at. Right. You could be a hedge or what have you. But typically what you'll see is when things are out to head to risk off, you'll see all those show up. Like they'll be mounds of them starting to get really, and it's totally transitory trades. They're not going to last very long, and they're really, really, really gambling. But like you can see those footprints through the scans. They're really fast. These are all on the phone. You set up alerts on all this type of stuff. If you want open interest, if you're looking for scale up and down in open interest, we have that too. But I use them I like the stuff for the Russell because the Russell's very active right now, and there's so much action in the Russell. Russell's growing a lot. The on fire calls is the whole market. You can see FCX like show up here. This is the whole market. So like if you're looking for like total what's really standing out in the entire market, large cap, small cap, mid cap, it's here in the on fire calls. And that's stuff that's genuinely way outside of its normal activity, and you'll be able to pick that up. And really you can see some pattern in those types of things. And maybe you take them back over and then reference them. So like that's why I say like it really depends on what you want to do. If you're looking for institutional trades, if you're looking for diamond hand stuff, if you're looking for we have and what I would tell you is if you're looking for like the Cathie Wood stuff, we have all that created. Genomics innovation, we've recreated all of their particular strategies inside of here. So if you look at genomics, this is like everything that's going on in that particular thing for Cathie Wood's book. So like this is built off of those types of holding structures that they have, plus the other things in that space. So you can see BMY's getting hit pretty good today with some decent size, but none of this stuff's got huge volume. And this is where I was saying like you kind of got a little Lord of the Flies action going on in the summer, because even though these are a little bit outside their rolling averages, right, they're not a lot of volume. And so like you're seeing the volume teeter off a little bit. So I think it could lead to having a little bit more activity in each, you could have more pockets of volatility, but will it be continued? Well, probably not. Upside or downside, because you don't have the follow through volume. You don't have the major market moving volume, because all those guys are at the Hamptons, right? They're in wherever they're going, right? The guys are off the desk. They're out for the summer. They'll be back in August, right? For the most part.
And they've basically given a directive to the B team saying just don't let the market fall apart. It is
keep it in here. Yep.
The worst month. I hate trading in August. It's just crazy Ivan behavior. You can do fabulous chases, right? I mean, 15-minute, an hour, a few days maximum, but just trend trading in August is always just an exercise in frustration, I find. But yeah, they're getting ready. They set you up for the July, dullness, and then the August crazy Ivan, and then we get back to market shenanigans in September with volume and with direction, usually to the downside. And this year we've got August Jackson Hole and then September FOMC. But what are you finding? I mean, we've talked about inflation a lot over the the many months. What are you finding in regards to market structure for rotation into or out of? So you just showed some massive XLF stacked calls. We're talking 0.08 put call ratio is way heavy to the bullish side. And this is an aggregate, so it still is, you know, clearly indicating strength in banks. Having
Yep.
said that, yields have pulled down, banks have started to soften, regional and major. And that's all very healthy, in my humble opinion. For those who are trend traders, you have to have this shallow pullback, I call it, in order for it to base and then have the energy to move higher again, and then sideways digestion, shallow pullback in order to have the energy to, you know, move higher again. So that's all really, really incredibly chaotic for those who are on a shorter time frame. But if you're a trend trader, it's a beautiful thing. It's very dangerous when it gets into parabolic motion, because then you have trapped longs, right? It's way removed from its mean and it has to come back. And that can be dramatic and it can break things. So I don't like parabolas in trends one bit.
Yep.
So having said that, you're saying that the XLF is still pretty bullish in call buying, but what about market structure like you're showing right now?
Yeah. So, I mean, you know, when you get that sideways action you're talking about, like it's digestion, right? So
Yep.
like, is market accepting price at this level, or is it going to reject the price at this level in the auction?
It's got to
So
test
then
it out. It's got to test the bulls. How strong are they?
yeah. So like 35 is a shelf right there, right? Like, if I look at the gamma exposure, it's still look at that heavy to the bull side,
Yeah.
right? And you know, it's all dips are going to get bought right now with the way the options market is set up. And you can see that shelf is right there at $36, $36.50, something to that effect. And the distribution,
Unless that shelf
right,
is broken at
yeah,
30.
and you could see right there, like kind of zoom in a little bit, then you got really the major point of controls at 34, 35,
Yeah.
right? And so when you look at momentum as on a rolling basis, it's starting to reset a little bit, which is like crazy. But flows are kind of leaking, right? This kind of action where it's not like just is straight down. This is feels more like kind of doldrums to me right now, and that coincides when you're looking at with the options market. So if you say, okay, I see in a lot of call activity, it looks more interim, and these are longer dated calls. These were out, you know, fall, winter, and then into the spring of next year. That seems like, you know, this has got some chew through up to 34.50, 34.50. That would be very
Exactly
strong
what I
support.
put yesterday.
Yeah, very strong support there, and like you'd have to chew all the way through that. And I mean, you get under that. This is still a pretty healthy profile. It's not looking like most. Like you zoom out. I mean, you got some levels here. The crazy thing to even think about is we are what 65% off of the election, right? Like some serious moves. I mean, even with a 25% drawdown and like most asset classes, if you had a total risk off, just mess out of somewhere, I don't know, you're still going to be having a hard time to get back to where we were in November. So I don't think that this is not got much downside perspective at the moment you're seeing it would just take something pretty significant to flip that and to liquidate that jack structure that it's got right there. Now, you said earlier that a lot of stuff rolls off, so we have to see what that looks like. That could cause more chaos in the next month for sure.
Yes.
Like if that jack structure unwinds after Friday, and then you get a little bit of change, and then you see that structure change to where it was more neutral. If it gets neutral and everybody's going for the summer, then you could chop up in this range for a little bit for a while. If not, if you don't see it roll off and it just rolls over, right, which you'll know Monday, Tuesday, next week, you'll see it roll and where it lands. If it rolls like positive again, then you could just see this thing leak all summer. These types of plays, because this is not the action of volatility. Look at this and then look at this. When you look at like these names, these are volatility.
Yeah.
Like this is volatility. Snap. Like all of the trading action is in those Momo names, and in that higher class of the highly, not higher class, but higher options volume trade environment for the what we call Roaring Kitty or the Wall Street Bets type environment where you're getting tons of option contracts traded. Then that leaves these other things to their own devices. Well, if you don't have any volatility in the banks, you don't have any volatility in the I look at like just look at oil, right? XOP. You had these look a lot like XLF when all the traded actions taking place in like Coinbase and DraftKings and stuff like that. These things are left to kind of just meander because they're just rotational shifting, right, to an extent. And so these are over here, and then the trading actions over here.
Yeah, you also know that my thesis for energy has been bullish because it trades as an inflation hedge. So
I totally agree. And those things are
really
starting to shake out that way.
Yeah, and it's really oversold relative to momentum. I'm talking about, like in time, not just in the current space of a few months or weeks. So there's still a lot.
That trade's got legs, I think. And it could go for a while. Look at this, for example. This is a market structure example. That move off of that high for housing, that wasn't retraced. That broke.
Yep.
And it's reset. So now the trading range is under 75, and the flows are disastrous, right? Nobody's wanting to touch it right now, and momentum is staying below 50. And so this is now got to hold this kind of shelf area right here, right? Or it's going to visit 62, which is kind of more volume weighted average price control, and then the big time pivots that sit down there. But like this is a different reaction than you're getting in oil, and it's a different reaction than you're getting in PMs. It's a different reaction. So the inflation stuff is like kind of getting a different reaction than housing all of a sudden, since lumber's come off. And so I don't know, where this is a little bit different. This looks different than like XLF looks similar to XOP, right? There's some stuff that looks pretty similar. And that's all that stuff that's ranging in your inflation conversation that you've had for rotation to value for some time. So I just was going to point that out.
No, it's so funny. I have to show you this because I have right here in my Slack channel for clients, right? I'm kind of on this reflation and the deflation of the reflation trade. So if I just type in, for example, XHB, you remember how you just said 62?
Yeah.
So literally, I warned on May 14th, the weekly bearish engulfing bar meant home builders were due a rest. It hit 80, now 73, soon 62.
Yeah.
I wrote that on June 10th. But the point is, that was I'm following lumber for years now, right? So I'm very in tune for multiple reasons with lumber. And lumber hit my price target, and then my 1750 to 1200 bounce, then down to 1000. I think we're going to get a firm bounce at 1000, and then. But my point is that will correspond with a pull down in XHB as well. So yeah, I really like this reflation trade, but short term, it is very healthy to do these pullbacks. However, that was already set up to break.
That was your parabola right there. That's not market action. So.
No, I don't consider that a parabola. I just consider that extended, and then it's very quick and kind of violent. Look at that gap down on a daily. This is a week, by the way. That's day. That's intraday. But this was just it. The kiss of death was the gap down, and that whole bearish engulfing goes sideways, and then it breaks the 10-week. So you and I, it's funny. We're like, it could go back to 62. So these are fabulous, reflation themes. But then when the parabola in lumber broke is when the home builders immediately started to have profit taking. So banks have only recently done that. And that was another kind of area where I was waiting for XLF, this $38 area to break, and it still hasn't pulled back very much. So it's fascinating when you say, you've got all this, 0.08 put call ratio stacked to the call side. It's so far just kind of like meandering down, but it's not very convincing.
No, not at all. And you've got like, click to trade apps, right? They're not trading XLF calls, right? Like, you know, most of the stuff in the click to trade apps like Robinhood and so forth, Webull, et cetera, there's a lot of the actionable, right, names, and most of these names are names that people know, so they're more likely to trade Coca-Cola than XLF, right? So
This is
more,
true, but look at the call buying that's coming in before
that is
that's
that is
FOMC tomorrow.
that's institutional, right? So to me,
Huge,
it's
huge.
institutional, and that's what you're seeing. Is like, that's what I mean. You've got the action that's going on in a tradable environment, which is like much more, and a tradable environment, that transitory environment. Those are the apps, et cetera, which is good, solid size. These are sizable folks trading, you know, in aggregate, right? But like when you look at like blocks, big time sweeps, but major blocks, and you can run. By the way, you can click like the filters for us. You can visualize the blocks and the sweeps and all that stuff and see what's really sticking out as a sore thumb. But this is all call side, and
Yes,
like you're seeing call side in size, you can't ignore that. Yeah. Like, and it's really interesting because you're like, you know, that's why I say my thesis, like, unless you see if it gets into a zone after this OPEX where this stuff rolls off and it's kind of on its own, it can just meander, right? But if it doesn't go in, it doesn't go into that summer zone after this OPEX and that rolls and all this stuff rolls, which is kind of looks like it probably is like, because these are longer dated. Like a lot of that stuff's not going to roll off that I was just looking at, because that's like next quarter, next year. Mm-hmm. That stuff could lead to like a very, very 2017-esque summer where it's like everybody's going away and it just leaks up. I honestly could see that really easily flowing through the end of the year. And the more liquidity that's in the system, the more rotation, and it's all, nobody's, as long as volatility is just asleep in hibernation, which totally is right now, and there's no real hit in inflation that people are like wrapping their heads around, which there's not. I mean, we know it's there. Kyle Bass says like 12%. That's what Kyle Bass's number was, and he's
Kyle Bass for what? 12% for what?
Inflation. So he said inflation's 12%. As he put that out there today.
This there's a site that yeah, I know what you're talking about. Okay.
Yeah, so like, you know, that's not the consensus though. No. You know, and you're not everybody going back out, right? But the underlying, so the institution side is very much on that train because they're going into energy, going into these other plays, like starting to see some sizable sneaky plays in certain places, and like they're longer duration.
Everything to me right now is a rate trade because you can't get it through the bond proxies, you know, so it's got to be through the cyclicals and value that.
What do you think about crypto now?
Yields. So I do see I don't like it, but in other words, I don't think it's very sticky or safe, but I can absolutely see a case for this moving higher into 47,000 pretty quickly and then getting rejected. So I still, because I look at it as a commodity still, but why? What are you seeing in how do you see it?
I don't know. Like,
no, I think it could be. You don't track options on Bitcoin, but the proxies.
So the proxies. So like, it's in the doldrums. I could see it being in a doldrums for a while, right? Maybe 6 months, maybe a year.
Yep.
I don't think it's going to collapse. I think if it was going to break down and it broke 30, but maybe a capitulation later in a few months or something like that, where it burns off a little bit. But I see too much. I see too much investment into the space where there's stuff being built in and around the infrastructure of the space. That's not bearish, right? Like that's in the long term, that's very bullish for the whole space. So I think the coins are probably going to be range bound until something else changes that later this fall, early next year, something to that effect. Where it either breaks down or it continues further. But I don't see any action because I don't think there's going to be any action without major trades going on, unless something breaks, right? Which is just the only outlier you have right now. So I think with the investment into and around the space that I continue to see just massive investments, the largest investments in the venture space And you can get like Crunchbase, if somebody wants to see what's like hitting every day. And I suggest everyone does, because I think it really affects stock market trading more than ever before.
What do you mean?
You got to see where the dollars are going from the venture side into some of the stuff in the space. And so like ExecSum is a good little daily quick bite in the morning that has all the venture M&A activity quick, where you can get through it pretty fast. And then Crunchbase has something too, or TechCrunch, either or, where you can kind of see what's getting invested too, as because if you got like slugs and slugs of Series A, B, C's, and going into this crypto and just let's say blockchain space, it's going to be hard to see that stuff going to zero, because there's just too much infrastructure being built in and around it, which is a very interesting thing to see how it plays out the next few years, because it's still quite early. But I think that very much plays into it. But you're also seeing that happen in different other sectors. And the sectors that you do see that in, and you can really track like M&A activity in there too, as it relates to like, public companies or companies that are not necessarily SPACs, but like maybe companies that are grabbing companies, you start to see some patterns. You can match that to your options activity. So it's just something worth checking out, where you can get it on a daily basis, because the last 3 months of venture activity is the greatest of all time. And that was after last year, which was like setting records on a daily basis. So this is just a very liquid environment. So you're looking for the patterns, more than anything, in my opinion. So I that's where I'm getting my crypto take, is like, I just seen everything the last few weeks. It's like, man, crypto, blockchain, this, this smart contract, that. It's like, wow, it's just, there's a lot of risk on appetite going into a lot of mid-stage to late-stage ventures in that space, which are going to manifest in M&A activity or different things that happen at the probably not the public company level yet, but you could start to get to see that as it graduates.
MicroStrategy is still doing everything they possibly can to leverage every possible angle to.
I'm not talking about that.
Okay, all right.
I'm not talking about that. Like basically I saw the best thing about him the other day. So that he's just trying to buy all the Bitcoin he can that's available in the world, so then it can't go down, which I thought was hilarious. It was a joke, but like it's kind of, there's different things. I think there's two totally different things. There's the space and the infrastructure as it relates to blockchain and what that's happening to other products, and then there's the crypto coins. The coins seem to be kind of in purgatory, unless something changes and gets over the level you just mentioned, and that could go on for a while, because the attention is not there institutionally or from the retail side at the moment. And they're for different reasons.
Many were, late to the party, and obviously it dropped 50%. So for last in, first out, but the institutional and the hodlers are still there, most likely.
Webull is experiencing exponential growth right now, which is like Robinhood competitor, right? Mm-hmm. Which Robinhood has experienced exponential growth. Hence what I've been saying, like, man alive, this is not slowing down. That, you get one liquidation and 3 more new traders pop up, right? And that's kind of one of the things that is underpinning the next bid, right? Like, these things are big trends. So I think I'm going to side with like maybe some, depending on what happens on Friday with that gamma roll off, that you could, if it kind of leaks underneath those levels, then everything could be range bound for a couple months. If it doesn't, it could be 17 all over again, where it just is like, are you serious? Like, just
Yep. Well,
just keeps going.
We're not far off. The funny thing is, there really aren't a lot of hedges, right? The dollar isn't serving, the bonds is not serving, and volatility certainly isn't serving as a hedge. And when it does pop up, it's hot fire flames, and then immediately is sold strongly. Yeah. Which is very much in keeping with this rates, suppression. So it's fascinating to me. But Bitcoin, gold, and cyclicals as an inflation hedge, those 3 are seemingly staying bid. You see it in your option flow. And are you seeing it in not just banks and energy, but are you seeing it in the crypto proxies, the Mara, the MicroStrategy, the Riot, the GBTC? No, GBTC doesn't have options.
Yeah. Mara is the number one in I forget which sector they were. They're the number one every day. And And then you see it, like the PM stuff was like, it's sneaky.
What do you
Like
mean
it's
PM stuff?
the
Floor?
precious metal
Oh,
stuff. No,
precious metal.
precious metal. Like
Okay.
it's sneaky. Like there's no follow through on that to the downside, and you get constant bid in the options market. But it's sneaky. It's not. It's genuinely like a path. Like there's nothing for 3/4 of the day, and then by the end of the day, it's larger than half of the sectors. It's just very, very sneaky. It
Sneaky.
stinks
That's a good word for it.
it stinks of like strategic accumulation
Okay.
or hedging of some kind. I don't know.
Silver
It
hasn't
could
gone anywhere but sideways. Palladium
it's
and platinum for a
yep.
year have like stair stepped higher, softened stair. It's been the most boring commodity for retail. It's really hard too. The margin is high, etc. But it is sneaky. I can look at it and go, it has done nothing wrong.
Sneaky. And that leads me to believe like inflation they'll let run real hot before this is said and done.
No, I think
That
maybe they don't believe the Fed, that the Fed's going to stay on their path saying it's transitory, but they're hedging their bets that it isn't. With
oh
food
yeah,
prices and energy prices worldwide going.
this is not transitory from a. I think it's a quite insulting thought.
Oh no,
That
they did surveys. They're like 63% agree with the Fed. It's transitory,
yeah,
but whatever. It's for
it's
me.
an insulting thought because like if you think about like the goalposts moving, like once you put that much liquidity in the situation, you move the goalposts, and which that's the point of inflation is to move the goalposts, right,
Yes,
and to change the game,
in
and
a
they
very
did,
sneaky way.
yeah, and they
So,
did, totally
so
did.
what's going on with bonds as far as option structure? What do you see for bonds and
Oh
gam?
my,
Yeah.
you're really putting me to the test. I haven't
I
looked at
have to
bonds
because that's
today.
because it's still a really important theme, even if people don't realize, bond their tech is really a bond proxy. So I want to see what's going on, if anything, with a few things that are under the
Whew.
yeah that have
Yeah,
been under their um, their high
it,
point there.
it
Bonds.
just doesn't. They just don't get enough like realistically like premium to drive. It's predominantly bearish. What I'm looking at right now, but like
Can you share
it's
it?
yeah, sure.
Okay.
Sure.
We've also seen many a day where bonds sell off with stocks. So they're not even close to hedge material. But then I also see, the same thing, which is funny. Yesterday, in fact, I wrote for clients, we have some fun divergences to keep an eye on. Bitcoin bounces at times of the gold selling, which, that's quote unquote correlated. Momentum is selling off with value. Stocks are selling off with bonds. And the New York FANG, which is the big tech plays equally weighted, they were getting a bid as volatility of NASDAQ was also getting a bid. So, all right, so show what TLT at the very least, the
Oh,
favorite.
TLT is TLT looks terrible. Like it's not enough heavy volume. It looks abandoned. Honestly, like that's an abandoned number, right? Like just such like nothing, like next to nothing, right?
I
Like
can't even read that PC number. Is that
it's 5.86.
5.86
Yeah,
to the
all
put
puts.
side?
Yeah, all puts.
Okay.
All puts. Like and I think it's just getting sit on, not but sit on. So like it's getting sit on right now. So like, I don't I think this trade doesn't change. Like I know folks thinking it might change or whatever. I don't know. This is kind of in a beat down for the moment, and staying there. Like I know that it's made a rounding kind of base here,
Yep.
but it's still kind of way below this whole like market structure level right here. Is it could fill in and it could hit all the way up to 150 and kind of just hit the VWAP for the last year or so, and it would mean anything. Like there's
That's too funny. I
more.
literally in my live trading room I said 148. It could
Yeah,
still
it's
go to
right there.
148 and I would still be a bond bear.
Yeah, I 100% agree with you. And the bond and the options market concurs with you on that. And you look at this like there's just it's been abandoned,
Okay.
right? You're not getting any action in this, which for the bullish side is not necessarily what you want, because if volume and you want piercing moves to really start displacing market structure the same way you did on the bearish side. And
Yep.
you're not getting that. You're getting
All right.
you're getting what leaky gorp, but in a bearish basis.
Okay,
So
then what
I'm
about
with you.
then what about small caps, IWM and VIX? Let's do those two before we close.
Yeah. IWM is like at that, it's over the shelf, right? I
Yep.
don't know what gamma looks like. Gamma's tough on this because it gets hedged a lot.
Okay.
So, IWM really gets hedged a lot. And you see that all the time where it's sitting there like that. But you can see that it's up and over the hurdle, which was this volume shelf that had lasted since February.
Okay.
So and with volume flows coming in, right? So when you look at the actual inside IWM, like when I look inside IWM versus like IWM on the outside, right? That's inside,
Yeah.
right? Those are the stocks inside of it and how they look versus IWM traded by itself. When you look at like IWM,
just by itself.
Today, by itself, and it's not even showing up on here. Let's see, in the top 50 equities. It's hiding right here.
So it's really swamped by the others.
Yeah. Well, what happens is like, it's in there. It's actually red. But what happens is it's hedged out, but all of the underlying is getting bought heavily with calls, right? And so the index itself is being hedged as a hedged vehicle.
Okay.
But in what I think, if you just look at this, is they're just hedging a breakdown, right? That this doesn't break out. I think if you see this like break out and stay here above this 223 shelf, then this is going to run. I think this is a pretty easy trade if it holds over this level. And this is another reason why I think this summer it could just leak, because that's exactly what happened in 17, because it was just carried kind of forward with the small caps. And if you really want to, like, you can play, I wouldn't play the IWM itself, but maybe like you're looking at the stuff that's inside the IWM. Like, what are the things that are going to get real alpha? And you can kind of track that inside of the Russell, because there's so many different plays inside of the Russell.
It used to be casinos, basically gambling stocks with a heavily weighted IWM components, but right now it's GameStop and all the rest that are just taking up retail space. All right, so Clove is a question, CLOV, and then VIX. Those two, and then let's close.
Okay, yeah, there you can see it. Caesars, AMC,
and GM. Yep, exactly.
Plug, Penn, Novaks, Cleveland Cliffs. I don't know. Did you see the thing the other day about the Cleveland Cliffs CEO talking about he was going to make the shorts kill themselves?
Oh my God! And then he had none on.
Well, mine was hysterical. Just what a.
He's going to be remembered, but for the wrong things.
Wrong reason. Yeah. So like these plays inside of here are going to be far more exciting.
Yes.
Trade wise than the actual.
100%.
Okay. All right. So what do you want to look at?
Clove and VIX. Let's see what we have for.
Oh, not weed. You don't want the weed.
Yeah, the CLO.
Maybe you want the weed, but yeah, let's see here. All right.
There it is. I see it. You want to play with thread of that. Because that had such a massive handle, right? Yeah. And then boom. I mean, it's not even tradable. That's just not tradable. But what is it? Where is it?
When you look at this, right, it's still sitting above VWAP, right? And momentum's breaking down. And then the flows are still positive into the security. So it was a big move. I think as long as it's over 10, it could take that kind of same look. This looks eerily similar to our friend right here, right, where it comes back down and then rips higher again. This to me may be the most meme stock of all meme stocks, right? Because this is Chamath, and this is like, the way that this gets going, and it really gets frothy. So I think that this is the type of stuff that could really run the summer or what you want to see if you're looking for like a level of market structure, like, where would I watch? You're going to watch that 1165 level,
Yep.
right? Because if it gets underneath there and breaks, typically what you're going to see is like a half a big body bar get broken, which would be, coincidentally enough, right, half of the red body bar, almost like clockwork, right? So like when you look at this, that 10, and that's like 1050 to 1080, that's that volume shelf right there that blew it right out. So
Yeah.
that's where all of the strong hands were. Strong hands bought here, sold up into this move. Now they're sitting back here. Would they get it again? Could be. And what you could see is if there was some options activity coming in on that ahead of time, like what's transpiring right from the options side. That nothing, not 3 million in premium.
That's nothing.
Nothing. So it's kind of being left to its own devices right now. But if you look at this, you can see why, because it's in no man's land, and it's got this whole vacuum right here for the shelf between this fair value gap. So it's exploring this right now. I wouldn't be surprised to see this hit $10,
100%,
1050. Right.
Yeah. And then have to base for a while, and then have to base for a while.
Yeah.
So what do you see for VIX?
VIX. Oh man. Let's look at the options in VIX right now. VIX is like, I don't think, not VIX, VIX. $73 million neutral today.
But it's neutral, so you don't even have a preponderance of calls or puts beating the tape. You really have folks that are moving from maybe bullish to bearish, but they haven't totally committed, and yet skew is at like a multi-year high. Skew is showing that folks are really loading up on puts, supposedly, expecting some crash that hasn't come.
That's a neutral number.
That's a totally neutral number.
Right. Yep. And this is why we use 1 to 1.5 as neutral, because when we looked at it the last 3 years since options exploded back to 2018, it's got to really break 1.5. Once it breaks 1.5, it's bearish, and it can get heavy bearish with the way the market is built. And that's why you see like this kind of, when you look at the way that we graded this to 3.5 is bearish, and then it gets what, we call it just blood red, because it gets really dumpster fire after 3.5. But this 1 to 1.5 is really kind of like, it's just hedging.
Like, how did you remember what was the one that we looked at that was 5.86? It's off the Richter scale.
It will rescale itself, by the way. Like, the system will rescale itself in times of turmoil. So just know that it'll go to like 10 or 20 or whatever, because it gets out of hand in today's world. So VIX is looking very, 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 very neutral. Okay. And this is the VIX. I don't like the proxies because they're not getting enough action unless it's like getting out of hand, and then they get a lot of calls. But they're built like VXX and UVXY. They're built to just go to zero. Yeah. So like the VIX is much better. Yeah. So far,
neutered has been my term for VIX. Neutered, and that hasn't changed yet. So we'll see if we get any motion here. But so summer is heating up, and yet volume is definitely cooling down. Yeah. We'll see if folks back to work. So some states obviously have kicked the unemployment benefits to the curb, and folks are kind of going back to work, or they're traveling, like you said. All that pent up demand for time out is conspiring. And then of course Wall Street does this every August. They go to the Hamptons, whatever, and just tells the B team to keep the market stuck together. That's my conspiracy theory anyway. So then that's it. We have to play this by ear and follow those fabulous scans and the option flow, and see if we get VIX moving from basically bearish, has now moved to neutral, could move to bullish very soon.
And you would see that in that call file, like the scans for the index will pick that up. If you pick that up, go run the Vixxinator, because then it's going to tell you which ones are really getting the action inside of the VIX complex.
Vixxinator? You have a scan
Vixxinator.
called Vixxinator. Oh, I love it.
Yes.
All right,
Yes.
this has been very educational, which will prove to be very profitable. We definitely have
Vixxinator.
OptionsMatrix. I love that. Head into the mobile app and Apple Store along with my risk indicators, and Rithika is using them every day in the Discord channel, so that's working out well. So good to talk.
That is awesome. That Discord chat, that's rocking. Like, y'all got something cooking over there. That's good stuff. Feisty.
I'm just populating my market thoughts and my chase calls, of which there are many, but honestly, it's the engagement that she's really good with. This younger crowd is just very rabid for attention and the light. They like the light.
I'm telling you, this is great for the markets. It's great for liquidity, to have so many people interested. And then, like, if we can get our job to deliver, useful insights and information and let people grow their knowledge, and they've never had a better opportunity to participate in the markets. This is such a good thing. So I think it's a great idea. It's a great move. I think people ought to jump in there, and jump on board with that. So.
It's been fun and profitable. So we'll keep doing it, and we'll feed all this stuff from OptionMatrix as well as it relates to our calls, and get people to also check out this fabulous platform, and this just your scans too are just fire. They're really helpful. All right, Jonathan, have a great rest of the week, and everyone, thanks for joining. Sorry for running over. We do that sometimes. We'll touch base next week, and then we're going to cool it down a little bit in July and August. We're going to do it every other. When do you head to the Carolinas? Virginia?
Yeah, we're going to be in the Carolinas, Virginia from August and September. Got to get out of Florida. It's hot.
Oh, that's right. You're the end of the summer. All right.
Yeah, end of summer.
Thanks everyone for joining. Have a great afternoon. Oh, okay, we'll get all that. Hit me in DM, Helen. All right. Thank you so much in Slack. Okay.
Take care, everybody.
Cheers, everyone. Bye.